Hello, everyone. This is our first session for the personal tax, and we're going to start from chapter number 1. And we're going to look at the chapter 1 and chapter 2 in this session. I'm going to explain all the taxable income and income tax rules we have. And also, we're going to do some activity together. And hopefully, after this, we'll understand the basic implication for our tax. Now, chapter 1, it says taxable income. It's very important to find how much is the taxable income for a person before actually calculate the tax. Now, for example, if you ask me how much tax I need to pay to HMRC, or for example, if your client asks you how much tax you have to pay to HMRC, before you tell that to your client, you have to calculate how much is the taxable liability for that person. So for that reason, it is very important to calculate the taxable income first. So let's have a look at the chapter overview. So on the chapter overview, we can see here, we have a few things that we have to remember. So first thing you can see here, it says taxable income. Then we have a net income, and we have a taxable income, personal allowance. So we have savings, non-savings, dividend, exempted. So there is a lot of things. Let's talk about one by one. So when a person works for a company, obviously they get salary. This is our non-savings income. And if you have some deposit and if you receive some interest, this is our savings income. So for example, except from the interest, if any money we received for any reason, it will be our non-saving income. If only we receive any money from the savings account, that would be the receive of interest. Now I could invest some money on the bond, I could invest some money on the ISA for any reason. If I receive any money that comes because of the interest, then it will be my savings income. Other than any income I have, that will be my non-savings income. For example, employment income, self-employment income, property income, or pension. Any sort of income I have, that will be treated as a non-savings income. It is very much important to identify the categorize which income is non-savings, which income is savings, because the tax will be depends what type of income it is, and there is some allowance that we have to calculate. So you have to be very much careful with that to identify. The way we can easily identify, as I said, if I receive an interest, that will be my savings income, and except the interest, any sort of income I receive, that will be my non-savings income. Now the next one, we have a savings income, that is, you can say, interest and tax amount received in the year. So mainly it is interest. In the exam, you're going to see you receive some interest. Sometimes they can mention you very clearly, this is your savings income. The next one, we have a dividend. Now the dividend, we already know it is a part of the profit. So if the director of the company or the shareholder of the company, so not the director, so shareholder, mainly the company, if they receive any profit from the company, that is called dividend. Now, of course, if you invest some money on Tesco, and Tesco will give you the dividend. So if you receive the dividend, the income from your company or from any other company, dividend income, we have certain allowance. So you're going to see that as well, and how to treat the dividend. So the dividend will be clearly mentioned in the exam. This is the dividend income. So you have to know how to treat the dividend for the tax purpose. Then we have some exempt income. So if you get money from this source, that will be exempted. So you don't have to pay tax on that. So for example, ISA, the limit is £20,000 a year. So you're going to see that. So up to £20,000 a year, if you put on the ISA, you don't have to pay any tax. So ISA, it is an individual savings account. So there is a cash and there is also a trust. So you have to be over 16 or 18. So you can open an account. And if you invest any money there up to £20,000 a year, that is tax-free. It is exempted. Then damages and winning and a scholarship. So if you have some personal damage, for example, you get some insurance claim because of the personal damage, or you win a lottery, or you receive some scholarship, because of that, you really don't have to pay any tax. It is exempted. So you're going to see all of this from the chapter. Then the next thing we have, that is a personal allowance. Now, personal allowance is all about the tax-free amount. Tax tax-free amount. So the amount you don't have to pay tax. So this is called personal amount, tax-free amount. Tax-free amount. So you really don't have to pay any tax on this amount. And this is my personal allowance. Every year, the personal allowance is changed. For this year, Financial Act 2021, we're going to follow the personal allowance is 12,570. So this sort of information has to be on our head. Remember that even though this information will be in the exam on your reference material, but you should not depend on that, because more we remember this sort of number or rules, will be more faster in the exam. And in the exam, we really don't have time to read the reference material and answer the question. In every lesson, I always said, do not depend on the reference material. You have to make sure how much is the personal allowance, this and that. You have to remember that. So personal allowance is the amount is tax-free, and you really don't have to pay up to this amount. So if you earn up to 12,570 a year, you don't have to pay any tax. This is tax-free. The next one we have, this personal allowance have some question mark. That means the personal allowance can be reduced to zero if your income is more than 100,000. So for example, if your income is 100,000 or more, then we need to check how much personal allowance you can lose. So for example, let's say if your income is 105, so 105,000. So what will happen for every one, so let me write it down. Okay, so let's say your income is 105,000. Now for extra of 100,000, 100,000 is the limit. 100,000 is the limit. It is a threshold. It is by default, it is the limit. So you really don't have to worry like how the 100,000 calculated. It is by default. So it is the rules, like if your income more than 100,000, the difference between your income and the 100,000, you have to find the difference. And on the difference, you have to divide by 2, and your personal allowance will be reduced by that amount. What does that mean? For example, let's say if your income is 105, you minus 100,000 from here. You minus 100,000 from here, you find the difference. Let's say it's 5,000. So my income is 5,000 more than the threshold. So if my income is more 5,000 more than the threshold, what I need to do for this 5,000, my personal allowance will be reduced by half of this 5,000. So that means this 5,000 I'm going to divide by 2. Divide by 2, and that will give me 2,500. So that means my personal allowance will be reduced by 2,500 because my income is more than 5,000. The income is more than 100,000, that is excess of 5,000. So what will happen? From this 12,500, this 2,500 will be reduced. And it will give me my new personal allowance. That will be, for example, how much it is. So it will be less than 12,570. It will be minus with 2,500 because of it is exceeding the threshold 100,000. So I hope you understand how does it work, but we'll do some activities anyway. So restricted for the higher earner. So this is how we'll do that. Then we have the maximum restriction could be nil. So for example, if someone income is, let's say, 130,000. So what will happen? Because of 30,000 extra, if you divide by 2, it will be 15,000. So if you minus 15,000 from 12,500, it will be, of course, 0. So the personal allowance could be nil if the income is really high. Let's say 125,000 or 126,000, you lose your personal allowance. There is no personal allowance at all. The next word we can see here is called ANI, that is adjusted net income. What does that mean? Adjusted net income is, it is like we have to do some adjustment on your income if there are few things that comes with the question or that you have to consider. For example, the first one is PPC. It is called PPC, personal pension contribution. PPC, personal pension contribution. If there is any PPC or personal pension contribution, we have to adjust our ANI, that is adjusted net income. So what will happen because of the PPC and the gift aid donation, sometimes you give the money to the charity. So if this is happen, your income will be reduced. So for example, let's say income is 105,000, and because of you give 5,000 to the charity, or you give 5,000 to the PPC, so 5,000 will be minus. So it will show your adjusted net income will be 100,000, not 105. So your income will be reduced because of you contributing to PPC, or you contributing to the charity or gifted donation. Now, one thing I want all of you to remember, that is the gross amount. So this one, when you do the PPC or gifted donation, it has to be the gross amount. It has to be the gross amount. Now, what does that mean, gross amount? The gross amount means including the tax. Now, if you make, for example, £800 to PPC, and this £800 will be considered as a net. So if you give £800 to the charity, it will be considered as a net. And for that reason, you have to gross it up. So any contribution we make to the PPC or to the gift aid donation, it will be always considered as a net. Net means it is there is no tax there. So you have to always gross it up. How we gross it up? We have to always gross it up by 20%. So we need to divide by 8 or 0.80, whatever you said, and it will give you 1,000. So actually, you will get the relief for 1,000. So even though you're contributing 800 to the pension contribution or to the gift aid donation, but you will get the exemption for 1,000 because you always have to gross it up. So either you can do this way, or you can do this way, 800 times 100 divide 80. It will give you the same thing, 1,000. You always have to gross it up, remember that. So this is the story of our this chapter. So let's move on and have a look what else we have here. So this is the template. You need to make sure you remember this template. Write it down on the paper a few times so that this template stay on your head. It's very important. Like this template, you have to remember. So you have the 3 types of income: non-savings, we have a savings, and we have a dividend. And that's the total. Now, for example, employment, property, this goes to the non-saving. Then you have interest, saving, dividend is a dividend. That gives us the net income. Of course, if there is any PPC, you have to adjust, is a different thing. And after that, you minus the personal allowance. So remember that personal allowance always has to be minus from the non-savings income first. Always remember, whatever personal allowance we have to always minus it from the non-savings income first. Then we move to the savings, then dividend. Now you might thinking, why? What's the point? Because at the end, the tax will be same. No, it's not. Because the savings income and the dividend income, they have some allowance. So if you use your personal allowance with the savings and dividend first, you're going to lose that allowance. We're going to see it next chapter. But remember that any personal allowance you have to minus it from the non-savings income first. And after that, you have a taxable income. So you have a non-savings, savings, and the dividend. Okay, let's have a look. Some question maybe now. So the first one we can see here, they have some example. There's a Lloyd's Bank, Nationwide Bank Society, government interest. So Lloyd's Bank 80, and Nationwide Building Society 400, government guild 100, that gives you a total of 580. So this amount would be added together to calculate the interest to be included in the savings income. So all these are savings. So if you receive the interest, remember, if you have this word interest, that means it is savings income. The dividend, we already know what is it. And so the ISA, individual savings income, you want to read this one because there are some information that could be important. Individual savings account, ISS, these are the special savings account a taxpayer can invest in. Individual may invest up to £20,000 in an individual savings account in the year 2021 and 2. So they can invest up to £20,000 a year. This could be in the form of cash, share, trust, could be our insurance policy, anything. So it doesn't matter how it is. It could be cash, or it could be the insurance, or the share, could be anything. Investor may use their entire allowance on one type of investment. For example, the whole 20,000 could be invested in cash, or a combination of different investment. Doesn't matter. It has to be total 20,000. Dividend income from share and interest income received from cash based on ISA are free from income tax. So dividend income from the share and interest income received from cash investment on ISA are exempted. So any sort of income you receive from the ISA, individual savings account, it will be exempted. Capital growth is also free from capital gain. So even though if you have some capital growth, for example, how much you invested, and after a few years, if you can sell it for more, so you can have some gain, that will be still free from capital gain tax. An ISA may be opened by someone 16 years old or over if it only contain the cash. So if you try to deposit cash only, the person has to be 16 or over. But if it is for the trust, so ISA content investment other than cash may be opened by someone at least 18 years old. So if it is investment, so the person has to be 18 years old at least. And other, we have damage, of course, like if there is a personal injury or damage, if you get any money, so that will be tax-free. Scholarship, prize, gambling, and the premium bonds. So this sort of thing is a tax-free. You don't have to pay the tax on that. Okay, let's look at the activity 1, and let's try to find it out which one is the savings, which one is non-saving, and which one is the dividend income, and which one is exempted. So activity 1, taxable and the exempt income. We have Foster received the following income: building society interest 40, dividend from an ISA investment, rent 6,000, and non-ISA dividend. So you have to be very much careful with the ISA dividend and the non-ISA dividend, because ISA dividend is a tax-free, but non-ISA dividend is not. So let's try to do this question. So we said the first one, building society interest £40. So this is my savings income. That's my savings. So savings. Let's have a look. Savings. Then we have a dividend from the ISA. This is exempted. Any dividend from ISA exempted. So exempted. And we have a rent. Rent is, of course, rent is always, remember that rent is always non-savings. Non-saving. Then we have a non-ISA dividend. That's my dividend. So dividend. Okay. Then we have to show in this box. So you can say the first one is ISA dividend. ISA dividend. This is 900. This is exempted. Then we have a non-savings. Non-saving, we have rent. So it will go to the 6,000 non-saving. Then let's go a little bit down. Then we have the savings income. The savings, we have building society interest. So building society interest, that is savings income, £40. And we have dividend income, that is non-ISA dividend, non-ISA dividend. And this is my 450, it is a dividend income. That's it. So of course, like here, you just identify which one is the what type of income it is. So this is the basic understanding of our exempt income, non-savings, and the savings. All right, let's move to the next one. The next one, you have computation of taxable income. So let's have a look at this one. So we have some example. Now you can see here we have a trading profit. This is non-saving, and we have a bank interest. This is saving, Then we have a dividend that is 500 and net income. So it's 3,017. This from the net income. One thing you have to remember from the net income, if we minus the personal allowance, this is give you taxable income. So in the exam, if the question give you net income, remember that means you still have to minus the personal allowance. If the question give you the taxable income, that means they already take away the personal allowance. Very, very careful with that. I've seen the student, they get confused in the exam. So if you see it's a net income, that means the personal allowance still need to be deducted. But if you see the taxable income, if the question says taxable income, you really don't have to do the personal allowance again. So they just give you this sort of information for make you confused. So you need to be very careful. Like if I see the taxable income, so I don't do the personal allowance once again. If I see the net income, then I have to do the adjustment. All right, so let's have a look at the next one. The next one, we have a taxable income. So let's have a look. So the taxable income we can see here, it says Q earn a salary of 3,000. So we understand salary is a non-saving. So non-saving is very easy to understand. Non-saving. Okay. And he received rental income 1,000. Rental income is also non-saving. So we understand that. Non-saving. Building society interest. The building society interest, of course, savings income. So savings. And dividend income is dividend. So we understand that it's dividend. Okay, so employment income, we have 3,000. So we're going to say employment income 3,000. That is my non-savings income. Property income again 1,000. That is non-saving. Building society interest, that is we have seen already 3750. Savings income. Dividend income, the question already gave it to us 5,000. Dividend is 5,000. There is no I say here, so there is no exempted. Then you have to find the net income. So we have a net income 3 plus 1, it is 4,000. So non-saving 4,000. Savings income 3750. Dividend we have 5,000. And if we added this 3, that will give me the total. That is 12,750. 12,750. Okay. Now we need to adjust our personal allowance. So let's have a look. The personal allowance you already know that is 12,750. That's my personal allowance is fixed. It's always 12,750 for the whole year. Remember that. So it is fixed. So the personal allowance first we offset from the non-saving. So 12,570 I'm going to split to my all income. So first I'm going to use all my personal allowance, how much I need for the non-saving. So I need 4,000 here. So I use 4,000 from this 12,750. Then I still have left personal allowance. I'm going to use the whole 3750. So this will be gone as well. And I'm going to use this 5,000. So from the 5,000, I can only use, so this is 12,570 and this is 12,750. Very, very careful with that. So my total income is 12,750 and my personal allowance is 12,570. 12,570. That means there's some difference here. That is 180. Okay, so here if I minus 4,000 from 12,570 and the 3,750, so I have leftover personal allowance 4820. So that's my personal allowance left after using 4 and 3750. Now this is my total personal allowance, that is 12,570. That's it. Now this one will be 0. This is 0. But here I cannot remove all my dividend income by using the personal allowance because I have 4,820 left. So here I have 180 that is taxable. That's my taxable income. So total taxable income is 180. So my total taxable income is 180. So that's how we can use the personal allowance and whatever is is still remaining, that will be my taxable income. Taxable income is the income where I have to calculate my tax after adjusting some allowance. So you're going to see it later on. All right, so let's move on to the next one. Let's have a look. What is the next one we have? The next one we have restricted the personal allowance. As we said, if your income is more than 100,000, the personal allowance will be reduced. So let's have a look one question. There are some example. I think you already talked about that, so we can straight away move to the question. So we can see here the Karen has a net income. Karen have a net income that is before the personal allowance. Net income is before personal allowance, 107,000. All non-savings income. So the question make us very clear. All are non-savings income. Okay. So as the income is more than 100,000, we have to reduce the personal allowance, and the personal allowance threshold is 100,000. So from 107, we need to minus 100,000. We need to minus 100,000. And we can see 7,000 is basically extra. And this 7,000 you have to divide by 2. Remember that. Because the personal allowance will be reduced by half. So for every £2, personal allowance will be reduced by £1. For every £2, personal allowance will be reduced by £1 if the threshold is more than 100,000. So you can say 3,500. So it's a 3,500 is the difference. So 3,500. Okay. So what is happened here? So we have, so normally my personal allowance is 12,570. Normally that's my personal allowance. But now, because of the adjustment, we need to do adjustment minus 3,500. We only do the adjustment if the personal income is more than 100,000. So my new personal allowance will be now 9,070. So this is the first question. Her personal allowance is now 9,070. And her taxable income, how much is that taxable income will be? So her income is 107. So from the 107, we have to minus the personal allowance 9,070. So you are not going to minus 12,570 anymore. We're going to minus 9,070. 70. And that will give us 97,930. So 97,930. Very careful with this one because it will be always in the exam to adjust the personal allowance. Okay. Now the next one we have the charitable donation or the pension payment. As we said, we have to gross it up. So we need to be very careful with that. Let's look at this example quickly before we do a question. It says personal allowance restriction with the gift aid. Now, if there is a gift aid, it will reduce our ANI, that is adjusted net income. So you can see here as illustration 4, so that we have seen before maybe. Calvin has a gross employment 98, so that's the gross employment, that's non-saving income. Receive interest 1,500, dividend 5,000. However, he is now make a gross payment of charity. Now you have to be very careful with this word, gross. If the question said net, you have to make it gross. So divide by 0.80. Always careful with that. If there is a personal pension contribution or if there is any gifted donation, if the question mentioned it is a net, you have to make it gross. But this question said gross, we don't have to do anything. So 1,000. So he make a payment to the charity 1,000 under the gift aid. So that means 1,000 income will be reduced from my total income. Very, very careful with that. So my net income is 104. That is 104. The total of non-saving, saving, and dividend. The total above adjustment threshold is 100,000, so you must reduce the personal allowance. Okay, so let's have a look at that. So from this total income, we need to reduce 1,000. We have to less 1,000. Why? Because he put 1,000 to the gifted donation. It could be gifted donation, it could be the PPC, personal pension contribution. If we do anything, the gross amount will be minus from the net income. So whatever income he have, we called it ANI, that is adjusted net income. So now the ANI, the adjusted net income, you can see it will be now 103,500. So because of the PPC or gifted payment, the income will be reduced. So from the net income, we adjust it to find the adjusted net income. Now our personal allowance will be calculated based on 103, not 104 anymore. This is the main point here. So when I'm going to change now personal allowance, so I'm not going to do the difference like 104,500 minus 100,000. No, I'm going to do 103,500 minus 100,000, and the excess is 3,500, and we have to divide by 2, 3,500. And how much is the amount? This will be reduced from my personal allowance. So very, very careful with that. When we have a net income, and if there is any PPC or if we have a gifted donation, so we need to see how much it is, and the gross amount will be reduced from the net income, and we have to find the ANI, that is adjusted net income, and the personal allowance will be adjusted based on the adjusted net income, not the net income anymore. All right, so let's do one question maybe. You can see here, now the personal allowance will be reduced, 3,500 divided by 2. So the difference is here, 103 minus 100,000, not 104 anymore. All right, and you can see the whole personal allowance, the minus from the non-saving first, and this is our total taxable income. Okay, let's do this activity 4. So it says here, Karen, who has net income 107, now make a personal pension contribution or PPC, personal pension payment, 2,000 gross. So if it is a gross, I have no problem. If it is a gross, I'm very happy. I don't have to change it. So what personal allowance will Karen receive? What is the taxable income? Two questions. So how much will be the personal allowance? So very simple. From the net income, 107, we have to minus the 2,000. And that gives me 105. 105. And that's my ANI, adjusted net income. And I have to minus the 100,000, that is personal allowance threshold. That gives me 5,000 extra. Divide by 2, or let's divide by 2, make it half. That is 2,500. So my personal allowance will be reduced by 2,500. Normally the personal allowance is 12,570. And now it will be reduced by 2,500. This is the story. So 12,570 minus 2,500, that gives me 10,070. That's it. So my personal allowance will be 10,070. After the adjustment, only this one I have to minus because it is a PPC or gifted donation. Her taxable income, so this is the personal allowance, we minus it from the total income, that will give my taxable income. So 107,000 minus 10,070, and that will give me 96,930. 96,930. That's it. This is my taxable income. So this question will be definitely in the exam, how to adjust the personal allowance. So you need to make sure like you are revising well, because this will be like very much something in the exam. All right, the next point I always want all my students to revise, that is the tax planning. Always read that. Every chapter you have a tax planning. It will be very helpful if you work for your client or if you need to give advice to someone about the tax. So this is the tax planning you do based on what you learned today. So it's an individual will pay different rate of tax depending on the level of income. So if someone asks you like, oh, how much tax I need to pay. So you don't give an answer straight away. You said like, it depends how much you earn. So let me find it out. How much is your income? From where the income is coming from? Is it ISA? Is it savings? Is it non-savings dividend? So you need all the information before you give any advice to them. If possible, married couple and the civil partner should consider whether the cash balancing, yield interest, and the share yielding dividend could be held taxpayer a lower tax rate. So it's also important, like if it's a married couple, they might pay less tax. We're going to see later on. Other matter to consider, taxpayer could invest in product that yield exempt income such as ISA. So if someone said like, I have a lot of income, is there any way I can reduce my tax? You can say like, okay, you can put some money on the individual savings income. So if you receive any money from there, so you don't have to pay tax on that. The taxpayer could make a payment to personal pension scheme or the charity to obviously to extend your basic band. So this is also happen if someone try to give a charity, or someone who try to put some money on the pension, or someone is a higher income person. So you can say like, you can put some money on the PPC, that is a personal pension scheme. So you'll save some tax from this scheme. So how is it work? We're going to see chapter number 2. So this is our chapter number 1, and we have learned very basic thing because it is chapter number 1. So you can see this is the chapter summary. So in the chapter number 1, we just learned like so the difference between the savings, non-savings, and the dividend income, and how the personal allowance work, how to do the adjusted net income, and how to split the personal allowance. But it's a very basic thing. We learn some exempted, like which one is exempted, which one is not. So this will give us like very basic understanding. And from chapter number 2, we're going to do actually the calculation. So in chapter number 2, we're going to see how to calculate the income tax. And from there, it will be more interesting because we'll learn more like kind of what is the way we can calculate the tax, how much is the tax liability based on the different sort of income. So in the next session, hopefully you're going to do all this calculation. Thank you.